Hello everyone. You must have clicked on this video because somewhere you are falling short on the execution part, and that's what's stopping you from being profitable. Okay. So as a trader or as an investor, the important thing is execution. You should know where you need to execute. Okay. After taking all the confirmations, you need to execute the trades, and execution is the thing where people fail. Okay, so in this particular video what I'll be teaching you is about the execution. Okay, and execution is based on breakouts and breakdowns, but you'll find millions of videos on YouTube which talks about breakouts and breakdown, but this particular video is not like the other video, because this particular video has a logic behind it. Okay, has a concept that is used, okay, which will help you to find high probability breakouts and breakdown setups. Okay, and the concept that we will see is the concept of liquidity. You see here, liquidity. Okay, I'll be taking you on the other file where I'll explain you what the liquidity is and how you can use it and find high probability breakouts and breakdowns. Okay, so let's see. Now this is a word file wherein I've drawn some, like, these are candles basically. Okay, this is a concept of liquidity I'm trying to explain to you. Okay, say suppose right now the current market price is 390. Okay, current market price, this orange line is 390. Now the market will go either up from here from 390, either it will go on at 400, or either it will come down to 380. But how it is decided, or what is required for the market to move? Okay, so for the market to move, basically what is required is orders. Okay, now to go to 400 it requires orders. Now it comes to, if it has to come to 380, it requires orders. Now on 400, whose orders will be punched in? Orders will be punched in by sellers, like the SLs will be punched in at the price level of 400, and the buyers SLs will be below here at the rate 380. Okay, so those who have bought here, some must have sold here, some must have bought here. The ones who have sold here, their SLs will be at 400. Ones who have bought here, their SLs will be at 380. Now market has to decide whose SLs it has to hunt for. Okay, now this SL hunting basically will give you high probability breakouts and breakdown setups. You need to find who the market is trapping, and you have to bet in that side. Okay, say suppose if markets are trying to hunt the SLs of the buyers, then you have to go for a short side. Okay, if the market is trying to hit the SLs of sellers, then you have to go long. Okay, now how you will use it and try to find high probability breakouts and breakdown setup, let's look at it. Now here, if you see here, if you just draw a trend line from this high joining all the highs in between to here, you'll find that here, let's ignore the future part. Okay, just let's look at this frame. Okay, now if you just draw a trend line joining all the highs, what you see is here, that is probability of the price moving out of this trend line. But how you will know that whether this is high probability or not? Here, now you have to use a liquidity concept. Here you have to see if there are SLs available at the higher side in the sense at these levels, all the swing highs. You have to see whether there are any SLs available. Now to find SLs available, you need to see whether there were selling opportunities given for the sellers. Okay, you have to see whether market had created any selling opportunities where sellers must have short, and if they have short, then their SLs will be at those levels. Okay, now let's see. Here also you can draw a trend line joining all the lows. One selling opportunity was given here, breakdown, so sellers must have sold here. Another selling opportunity we can look is if we join all the lows, then here also a breakout was given. Okay, breakout was given, so here also if you see, the volumes have increased. Here if you see, the volume has increased after breakout down, the volume has increased. Means what? When after breakdowns or breakouts, if volume has increased, that means people have punched in their orders. If people have punched in their orders here, means their stop losses will be now where? Here here, and here. Okay, now if breakout happens, then your targets can be here, here, and here. Okay, the more the volume here, more the volume of sellers here, the more stop losses will be available at the upper side. Okay, now if you, let's see if market has what market has done. So if you see, market has taken out their stop losses. If you see, taken out the stop losses and went up. Understood? So this becomes a high probability breakout. Why it becomes high probability breakouts? Because there were selling opportunities given to the sellers and they have sold, so their stop losses are available at the upper side. So that's why market has gone to eat those stop losses. Okay, this is how you have to use the liquidity concept. Okay, let's see another. Let's remove this breakout. Let's see this breakout. Okay, now breakout has happened. Now you have to see where the stop losses are available. Okay, where here one opportunity was given, then this is all buying opportunity. So here only one selling opportunity was there. Okay, if these people have sold, here, then their stop loss will be on the high, right? So on this high and on this high. Okay, now look at the volume. If the volume has increased here, yes, volume has significantly increased, so their stop losses will be here and here. So let's see after breakout what market has done. See, after the breakout, market has eaten the stop loss of these people and these people, like these sellers, their stop losses has been hunt of these sellers. Okay, so exact on that point, from that point market has again reversed and continued the trend. But here the breakout worked. Why? Because there was liquidity available, or there were orders available of the sellers. So this is how you have to trade using some sort of logic, and this is one of the logic that works, and it works brilliantly in the market. So next time when you execute a trade, see that, or think like, if you are going long, think whether there are stop losses available. Try to find out setups where sellers must have sold. Okay, and then trade opposite of that. Okay, that's it from my side. Thank you so much.